Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking back in on gold and the dollar, starting with the dollar on the hourly, and the gold bulls and the miners are taking a sigh of relief here. It got a little scary today and looked like we were going to see further pullback and downside, but bulls saved the day there at the end. So what we're looking at is the dollar on the hourly, and it is still maintaining higher lows. And I've been pointing out the correlation to our members where we have the dollar and gold certainly not directly inversely correlated, meaning tick for tick, because if they were, things would be looking different. Whereas here, the dollar is still forming higher lows and higher highs, and we see the low at 8 a.m. this morning, and we still have a higher low. And we look at gold on the hourly, and the high of 8 a.m., we broke to a higher high. So if they were directly correlated, dollar would have broken the support by now, but they're not. So it's almost like the gold bulls. This correlation that is going on does favor the gold bulls because clearly we're still seeing higher lows and higher highs in the dollar, but gold broke that lower high and lower low pattern. So on the dollar, key support right now is 101.06 and 197 to maintain those higher lows. Resistance we rejected from the high today at 101.73. So the bulls are still holding on here. They are still in control of the hourly time frame. But if you look at the daily, we did not confirm that bullish reversal candlestick yesterday. It looked great to do so, a very strong start first thing. But by the end of the day, profit taking and a rejection from the 10-day moving average resistance. This now makes 3 rejections from this resistance, make that 4 rejections. And we're going to have to turn that into support to try and change this short-term trend, but not losing sight that the overall long-term trend absolutely still favors the bulls with the higher lows, and we're watching that $100 psychological level, a close below it, and then we are at risk of breaking this longer-term higher low uptrend. So the bears are in control of the short-term dollar, the bulls are in control of the long-term, looking out weeks and months now, and looking at gold, bulls are still in control here as well. So we still have these higher lows. The key level I'm watching is the low of this consolidation of 1187.71. Bulls really want to maintain that level. We dropped down today to 1195.75, and then the bulls showed back up. Now we are still seeing resistance. Remember we had this resistance line where this is where I threw in the towel and said, all right, I was wrong. The temporary top is not here yet. But that resistance level back then, which was turned into support, is now back as acting resistance again. It's right around 1206. Multiple tops pulling back just below that level. So we'll see if the bulls are able to turn that into support overnight. Of course, we've got the inauguration tomorrow, and a lot of people are expecting volatility in the market and in gold. With that happening at noon Eastern is when Trump's going to be speaking. So we're going to be keeping a close eye on things and the volatility. And on the daily time frame here, as I keep saying, we have yet to confirm a bearish reversal candlestick on this bounce. And yet again, looked like we were going to, but look where we bounced, just above the 10-day moving average support that I've been highlighting as the reason we were looking bullish, and the reason we're going to remain bullish as long as that is support, and bullish in the sense that the bulls have control of this daily bounce. But as of right now, we are establishing support. So this is what the bulls want to see, a pullback and a base of support build. So the low of today is 11.9575. That's now a key support level to watch going forward, and it also lines up with the low 3 days ago, right around that same level. So we can put a support line there, and this is what had me a bit concerned for the bulls because we hadn't been building support on the way up. But as of right now, we have a level to be watching, just like the last time where I thought that bearish reversal inverted hammer was going to be the temporary top, and the bulls bought the dip. That is also a support level to be watching. So these are so far away down here. I'm going to move it up. And the low of these consolidation are now 2 support levels to be keeping an eye on going forward, as is that 10-day moving average, which we bounced just above. So we have still yet to see 2 red days in a row on this bounce, and we have yet to see a bearish reversal candlestick confirmed. A lot of people are anticipating a bearish reaction to the market and a bullish reaction to gold with Trump speaking tomorrow. And whenever I see consensus in the market and everybody thinking something's going to happen, the contrarian in me looks the other way. So I would not be surprised tomorrow to see an initial bearish reaction to Trump at noon, a dump in the market, a breakout in gold, and then for that to turn around. Now, I wouldn't be making any bets on that, just assuming that that's going to happen. I'm going to be watching tick for tick what's going on, obviously, in the heat of the moment, but I would not be surprised for that scenario to end up playing out. So that's going to be in the back of my mind, just keeping an eye on things, not trusting the initial 15-minute knee-jerk reaction to Trump once he begins speaking. So it's all about this new support level, the low of today, and the bulls are still in control. Let's check in on those miners. Miners were doing their own thing today, and there wasn't a ton of correlation between gold and the market and miners, and I do believe that was traders positioning themselves to get ready for tomorrow. So we had an instance where gold was higher than it was earlier in the morning, but if you looked at the 5-minute chart, we were still significantly lower than the high of the day on these bull miners. And obviously the market was a bit of a factor there, but just noticing that there was a bit of a discrepancy in the normal correlation between the three. So gold, or I should say GDX here, now has a higher low to watch. And I'm watching these 3 higher lows, 2190, 2215, and 2255. We are still rejecting from the 100-day moving average resistance 2 days in a row, so that will be a key level. 2335. The bulls would love to close over that level tomorrow and end the week with that as support. That would show a lot of strength, and we are back testing this middle Bollinger Band as support, and it's currently 2281, so that's a key level to watch to end the week tomorrow. If we close below that level, it will be 3 rejections in a row, 3 weeks in a row from that weekly middle Bollinger Band. So the bulls really want to close over 2281. Checking in on the junior miners. A couple higher lows to watch here as well, 35.45, 35.50, and now 35.71. And here the resistance is the 200-day moving average, rejecting the price multiple times the past 2 weeks. That's at 38.07. So ideal day for the bulls tomorrow is a close above 38.07. And same thing with this middle Bollinger Band. We turned it into support last week, so a step ahead of GDX. And now we're back testing and holding it 35.95. It would be bearish if we close below that level, especially because this is a little bit last week of a bearish reversal spinning top candlestick after that 3-week bounce. And if we see a bearish reaction tomorrow and a loss of that middle Bollinger Band support, we are going to confirm that bearish reversal little spinning top, and we'll be looking for further pullback. So it's a pretty important day to wrap up the week, but heading into tomorrow, bulls could not have asked for a better reaction to a pullback today, still maintaining higher lows on the hourly, buying the dip, closing up near the high of the day. And from here, we're looking at that resistance, 1206. And then let's see on the hourly, the next resistance level we'd be looking at after 1206. I'd be looking up at 1216.46. So interesting day coming tomorrow. We'll wrap it all up over the weekend. I appreciate you watching, and I hope you have a great night.